Whenever you're looking at the broader market, it can be helpful to know what the internals are. So what's actually driving the performance? Now, in this case, we all know how the S&P 500 has been doing. Tech has definitely led the way this year. That's pretty well known. But lately, some other sectors are coming into the forefront. So today I want to talk about a really kind of non-glamorous, kind of boring, quote unquote, sector that's showing some strength, but making money is never boring. So really, you shouldn't be bored by it. This is an article I posted on Forbes.com yesterday, and I will post a link to that in the notes below. But it can pay to understand what's happening in a sector that really doesn't get much love in the media because it's just not as exciting as tech, and frankly, it's not something that necessarily comes into our day-to-day lives as much as like a Facebook, an Apple, a Google, Netflix, any of these. Okay, so right now the materials sector is up more than 4% so far this month, and year to date it's even been taking a leadership role, and tech is taking a breather right now. So the materials sector is comprised of companies in the construction materials, chemicals, forest products, mining, packaging, paint, all kinds of sub-industries. Things, again, you typically don't think of. Now, one reason for its current outperformance is the health of the housing market. Forestry products are hot right now. There's demand for new home construction, home repairs, remodels. Now, low interest rates, right, are playing a role in driving all of that. Stimulus payments were another factor. People had money to spend on these. Now, one thing that will continue to either be a driver or a drag on this will be the pace of any economic recovery right now. And nobody knows. Nobody knows anything right now. It's all highly uncertain, but we'll have to just watch and see. But for now, the materials sector really does look good. So it's often instructive to use an ETF as a proxy for the sector performance, as well as to understand what's going on. So we're looking here at the Spider ETF, ticker is XLB. It's up about 4% year to date. Now, performance of an ETF is always a little bit lower than the underlying index because an ETF incurs fees you don't find in the index itself. And we've talked about this before in some of the videos. As with any index, the most heavily weighted stocks have the greatest sway over performance. So the largest weightings within this sector, not necessarily household names like you'd find in tech or consumer discretionary. Let's take a look at some of the largest ones. So this is Linde, I think that's how it's pronounced, LIN's the ticker. This is a UK-based supplier of industrial gases. Now, of course, nobody knows about this other than people in that industry. Up about 20%, almost 20% year to date, and you saw some industrial slowdowns early on in the pandemic, those months of March and April where everything was more uncertain than it is right now. But the company has been growing sales, and it recently reported earnings per share of $1.90, and it beat analyst estimates by 15%, so that's pretty good. Here's Air Products and Chemicals, also industrial gases, supplies that and related gear to a number of industries. Almost 38% that this stock is up year to date. So it too topped analyst earnings expectations. And you see the technicals there trending along that 20-day moving average, pulled back a little bit from the all-time high, but you do see how it's doing right over there. Sherwin-Williams. Now here's one you might know. There's paint stores. There's actually a Sherwin-Williams paint store near me. It's clearly in an old Pizza Hut, which I find to be kind of funny because those Pizza Hut buildings are really distinctive. But now there's a Sherwin-Williams paint store. So that's also up about 30% in the past 3 months. And it reported earnings up 29% over the previous year. Now, industrial sales were down. That's kind of what I talked about a little bit regarding some of those industrial gas companies. Although guess what? Retail sales, home building, home improvement markets, some of those are picking up the slack. Okay, let's take a look at one more here. Newmont. Now, gold has been hot, right? This gold miner reported year-over-year earnings growth of 167%. Now, you see it's been consolidating, finding some technical support along that 10-week moving average there. Despite a recent rise in gold prices, Newmont is among several mining firms that are slowing production due to concerns related to COVID-19. So we'll see, remains to be seen how that goes. But right now, gold remains hot. Ecolab. Now, this is a company that is not doing so well in the sector, okay? It markets cleaning and sanitization products to hotels and restaurants. Okay, so on the one hand, cleaning and sanitization products, you'd think they'd be needed more now than ever. That's true. On the other hand, hotels and restaurants. What kinds of businesses were shut down due to COVID or operating under severe restrictions? So they may be coming back now. So we may see this company's sales and earnings grow a little bit more. So shares of the materials ETF itself gapped up Monday, up again on Tuesday, and while rising sentiment about mergers and acquisitions, optimism about a COVID vaccine, it's propelling the broader markets higher, there is reason to believe that this sector could continue its uptrend. I'll show you a technical signal that this one flashed back in July. You see there the 50-day moving average crossed above the 200-day moving average. Now that crossover often precedes a longer uptrend. Although, as with any investment, I always want to caution you this, downside trading, so say that something does happen here, this particular sector does take a tumble, you always want to be diversified into other sectors, global regions, and asset classes. Don't buy any one sector alone or overweight it. I guess you probably wouldn't buy this one by itself, but don't go overweight on this just because it's doing well. You do want to make sure this, like every other sector, is a part of your balanced portfolio. So that's what I got for you today. Hope you found that helpful. Thanks so much.